Even though interest rates have come down slightly, they are still too high for many potential home buyers. And if you are a first-time home buyer, you may feel this even more. Many first-time home buyers have been trying to get a home for a long time by doing things like improving their credit score and saving up for a down payment. And now current interest rates have them seemingly put out of the housing market.
I can't believe this.
But all hope isn't lost. Currently, interest rates are somewhere between 6 and 7% for well-qualified buyers. And the unfortunate news is, it looks like we are likely to see them continue to rise in the near future.
You gotta be kidding me.
Federal Reserve Chairman Jerome Powell has come out to say we still have a ways to go when asked about the recent interest rate hikes. But what does that mean for those that still need housing? Because the truth is, not everyone has the luxury to wait for interest rates to go down. So in this video, I'm going to give you a few tips and strategies on how you can still get the home you've been waiting for despite high interest rates. Plus, as an additional bonus, we'll also talk about when interest rates are likely to increase again and how this will affect the housing market. Hi, my name is Trenton Ward, and if you enjoy this content, please give me a thumbs up and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. High interest rates are not something new. Even though they can seem really high because we've quickly come from historic lows, they've actually been a lot higher in the past.
Say what?
This is why mortgage lenders have a variety of loan programs and strategies to help home buyers get homes they want and need. So let's jump into some of those strategies that you would have at your disposal. The first option we're going to discuss are the 2-1 buy downs. This is a type of loan program that will temporarily give you a lower interest rate on your home for the first 2 years, and then it will go up to your final interest rate after that. This interest rate will reflect whatever the current mortgage interest rates are. So for example, if your current interest rate would be 7%, your first year's interest rate would be 5%, your second year would be 6%, and then your third year it will go to 7% and stay there for the rest of your 30-year term. This is becoming one of the more common options given the current climate we're in with the Federal Reserve. The Fed is increasing interest rates to slow down inflation, but when they get it to the point where they feel it is normal, interest rates should start to come back down. This is where the 2-1 buy down option comes into play. If you are the thought process that the interest rates will come down in the next 2 years, you can plan to refinance to that lower interest rate before or soon after the third year comes. Next, we're going to talk about buying discount points. This is essentially an amount of money you pay to the lender in exchange for a lower interest rate. This is also referred to as buying down the rate. This is accomplished through paying points on a loan. A point is a term used to describe 1% of a loan. So for instance, if you're purchasing a house for $300,000 and the loan estimate from your lender requires you to pay 1 point, this boils down to you paying $3,000 in points to get that rate. Now, before you commit to purchasing discount points, you should get a good understanding of what your return on investment is. The best thing to do here is to have your mortgage broker run through the different scenarios with you. They should be able to show you a breakdown of how much each buy down scenario would cost you and how long it would take you to recoup your investment. The next option we're going to talk about is ARMs, which stands for adjustable rate mortgages. These loans are attractive because they will keep their low interest rates for a longer time. But when the low interest rate period is up, the rate can increase every year. There is usually a cap on how high they can go up every year and what the final interest rate will be. For example, let's say that you have a 7-1 ARM. That means you would have the same low interest rate for the first 7 years. And each year after that, you can expect your mortgage rate to increase. I actually use this type of loan program with some of my rental properties, so I know from experience how powerful they can be, but
with great power comes great responsibility.
So make sure that you have a good game plan in place to either sell or refinance before that interest rate hits you. So now let's get into when is the next rate increase likely to happen. The good news is that we are starting to see interest rate hikes start to bring inflation down. The not so good thing for home buyers in the near future is that they will more than likely go up some more in 2023. The Federal Reserve plans to meet again on December 14th to make a decision about the next rate increase. This will be the last meeting for the 2022 calendar year. The next time they will meet after that will be in January, with a total of 8 meetings expected to happen in 2023. Since inflation is starting to come down, many experts are expecting that we won't see as drastic of a rate increase in December. An interest rate hike of 0.5% is expected instead of the 5th straight 0.75% gain that we've been experiencing. One thing to remember is that if you get under contract before the rate increase happens, you can ask your lender to lock in your interest rate so that you won't have to pay the increase before you close on your home. Once the decision has been made by the Fed, it doesn't immediately change your interest rate, but you would definitely want to move quickly if you are close to that date. Because when you get a pre-approval, your interest rate is still floating until you find a property and get an official closing date. Okay, if you found any of this information helpful or enjoyed the content, please give me a thumbs up and consider subscribing. If you have any real estate needs in the Dallas-Fort Worth area, feel free to reach out. My contact information will be in the description below. Until next time, peace.